And so in the lead up to the budget 2019 to 2020, here is a comparison of the Indian economy from the time of the NDA government's first budget in its first term to how it is now. And we are breaking this down on a set of definitive economic metrics on how the economy behaved in the year 2014 and 2019, starting with the key parameter of gross domestic product or GDP growth, where things are not really looking good. During 2013 to 2014, it was hovering around the 4.4 to 4.6 levels, but in 2018 to 2019, there was a dramatic collapse from the highs of over 8% growth at the beginning of the financial year to a meager 5.8% by the end of it. But all said and done, India's economy managed to notch up much better numbers than most other countries at the moment. Exports in 2014 were touching the $300 billion mark, and despite single-digit growth, India's exports hit a new high of $331 billion in the last financial year. The rupee versus dollar rate was at around 50 to 60 rupees for $1 in 2014, and now it's down further between 60 to 70 rupees. However, that has been offset by a surge in imports. As far as the unemployment rate is concerned, data from the NSSO is available between the 2011 to 2012 and 2017 to 2018, and those numbers paint a stark picture, because it has gone from a little over 2% to 6%. While some parameters show the overall health of the economy, others inform us of the situation at the grassroots level. Inflation, for example, gives us a picture of how articles are priced at any given time. The retail inflation rate went from over 8 to 10.5% by 2014, but in the past 1 year, it was hovering in the range of 3 to 5%. This shows that the prices of the articles have not gone up significantly in the past year. A repo rate controlled by the Reserve Bank of India impacts borrowers, particularly home buyers, almost every single time there is a change. Back in 2014, it was at around 7.5 to 8%. But by 2019, it went below 6%, and for the last 6 months, or 3 bi-monthly policy meets, the RBI has not tinkered with the policy rate too much. Now, the budget is also an opportunity for the government to push bold new ideas, 2 of them that stand out. The first is Smart Cities. It is one of the pet projects of the Prime Minister. Since its launch, more than 5,000 projects in 100 cities were identified. In the interim budget, the Modi government had enhanced allocation for Smart Cities by 7%. The total allocation stood at 6,600 crores. The aim of the Smart Cities plan is to tackle problems faced in urban areas. This includes transportation, energy supply, governance, and basic urban infrastructure services. The aim is to improve the overall quality of life, but the Smart Cities plan is yet to make an impact. Now, reports say a large chunk of the funds haven't been used yet. A new approach to boost urban development is needed. By 2050, India will record the world's highest urbanization rate. Around 60% of its population will move to the cities. Another bold idea is to integrate the highly fragmented warehousing market in India. Reports say the government could announce a new scheme in this budget. Now, this new scheme could be aimed at the broad integration of India's warehousing capacities. At the moment, around 90% of the warehousing space is controlled by unorganized players. The government could follow a template from Maharashtra. The state government there introduced a scheme to identify warehouses spread across various government departments and institutions. Then, all these warehouses were taken over and are now managed by one nodal agency. Now, it's also important to gain an understanding on the union budget, which will be presented today. So I'm also joined in by Daniel J. Gertrude, professor and business analyst, who's joining us at the moment. Let's quickly go across to Mr. Gertrude. Sir, thank you so much for joining us. My first question to you is, what are your expectations from the budget that will be introduced by Modi 2.0 this time?
India is facing a common problem: how to use the tax code in a way that will stimulate the economy. Now, the trick to being able to do that is to not raise taxes, but at the same time be able to raise tax revenue. Now, the Modi government has not been successful thus far in doing that, because tax revenues at this point are down from what the projections were. So at this point, there are also many people that are looking for tax cuts, and they're looking for them in a form that would either be in higher exemptions or in increases of deductions. Now, most tax experts believe that this is not going to happen. So you have a situation here where the Modi government is going to have to be creative in their budget in order to figure out a way how this budget is ultimately going to stimulate the economy, thereby bringing in more tax revenue without having to increase any tax rates or taxes on any specific groups of people.
Right. Bring out more tax revenue without increasing the tax rates. That's a very valid point made by Dan Gertrude over there. Also, let's go across to Richard Russo, our expert on US-India policy studies. Mr. Russo, what are your expectations from the budget this year? All right, I think due to some technical error, Mr. Russo can't hear me. Mr. Russo, let me repeat my question. What are your expectations from the budget this year?
Ordinarily, I think the budget as a policy-making instrument is a bit less important than it was, say, 20 years ago. But I think there are three main things that the international community and the Indian business community are going to be looking for out of this budget. First and foremost, of course, is the first budget of the Modi government, Part 2. The budget speech. What are some of the main reform priority areas the government intends to focus on in the coming years? Second, and this is particularly, looking at the international trade fight that is happening between the United States and India, will the finance ministry make any concessions on customs duties as part of the budget? Third, one of the big asks of Indian industry leading up to the budget has been a reduction in corporate tax rates. So seeing whether or not the Modi government decides to move on reducing corporate tax rates is the third big area. So budget speech, reform priorities, in the budget itself, looking at the corporate tax rate and customs duties, probably the main things companies are going to be looking for out of this budget.
All right. Mr. Russo, do you also expect Prime Minister Modi to initiate major reforms again this time?
Budget isn't always the place to initiate major reforms. So I'm not sure that you're necessarily going to see in the budget itself something that takes India in a dramatically different direction. But I think early on in Modi's first 5 years, you saw some of the bigger reforms happening earlier in his tenure. A big reduction in some of the restrictions on foreign equity and foreign investment rules. You saw him move on oil and gas regulations, pricing of hydrocarbons, things like that. Some of the tougher reforms like goods and services tax took a couple of years. But by and large, you saw a lot of big reforms early out of the gates. And I suspect that you'll see that again. There's a logic behind it. A lot of reforms, as we saw with GST, they cause a lot of short-term pain. So doing those early in the government's tenure makes a lot of sense. But also big, significant reforms sometimes take years to gestate. If the government opens up a new area for investment, companies need to get licensed, they need to hire, they need to invest, they need to launch products. So reforms take a while to gestate and sometimes cause short-term pain. So big reforms, I would suspect so, and probably a lot more opportunity to do so early in the government's tenure rather than trying to get those done late in the government's tenure.
So clearly, big reforms are not going to be a